One thing that I haven't really seen too much out there is, we have the bank collapses. You had specifically run on the banks because of fear that they had losses in their bond portfolio. What is amazing to me is that I haven't heard anybody talking about the unrealized losses. It's an accounting interest. It's an accounting practice. I haven't heard anybody talk about what about changing the accounting practice and accounting laws around this. Nothing on there. And then two, the regulators encourage. It's very encouraged for banks to load up on bonds for years. And in 2009, the mortgage-backed securities, they were pushing mortgage-backed securities. And the reason being, bonds typically, depending on the bonds, carry less risk on our balance sheet and on our call report. Some bonds carry 50% risk, which means a commercial loan's 100%. So in an effort, you can put more money to work on bonds than you can on loans, and especially on mortgage-backed securities that are risk-weighted at 20%. And of course, rates go up, value goes down, you can sell it. But the intent for the majority of it, they weren't going to sell. And then you do see some frameworks where the larger banks last year, they were moving accounting industries and saying, yeah, we see this change, so we're going for available to sell to held to maturity. So they made some accounting transitions to see. Overall, I believe the bond portfolios have improved from end of the year to March. So when the next call report comes out and everybody's regulators and industry sees, there's probably going to be less AOCI out there. But it's still really amazing to me. We don't need new regulations. What we need everybody to do is hold the larger banks to the same standard as everyone else. It is complete other bullshit out there. I will tell my regulators that to their face, that what we are held to a standard and what they're held to a standard are completely different. They are much stronger. I don't know if it's because they feel that smaller banks aren't going to spend the money to fight them, or probably, incentive-wise for regulators, there's no incentive to necessarily approve things. It's just indecision. So after this now, what is really going to happen is any banks that are in great position, any growth that they're going to do, or any new products or services going to go out, they're going to go to the regulators. They're going to have conversations. And what's going to happen now is there's just going to be complete lack of indecision. And no one's going to want to approve anything. And it's just going to stall. And there's going to be finger pointing both aisles.